Welcome, Chuck Nicholson. Glad to have you here in the office.
Thank you, Mark, for hosting me. It's been a pleasure to be out here chatting with you and other folks.
You've been busy modeling, taking a look at some alternatives to programs that might help to bolster farm milk prices.
And farm incomes.
And farm
why don't
incomes.
we jump right into that? We
Let's
won't
do
keep
it.
folks waiting. So we've been asked by the Wisconsin Farmers Union to have a look at some of these programs. And we've been working on this for the last several months. What we want to do is spend a little bit of time thinking about where we are right now, because that helps set the scene
Sure.
for where we might have been or where we will be. We're going to talk about 3 different programs that we took a look at that we hope have some impact on farm milk prices and farm incomes. And then we'll think about the impact over the time horizon, going back to 2014 and actually going forward to 2020. And so what we're thinking about is what we implemented a farm bill in 2014. What if we'd done something different is kind of the way to think about it.
We've had a tough stretch of time, so it's a good time to take a look at what if something had been done differently.
Yeah, that's right. And actually we can look a little bit at how that time has been tough by thinking about milk prices going back to 2013. So we're really looking at the last 6 years. And I've got a red line on there that shows the average during that time period. And what do you notice about the time since about 2015, Mark?
Well, clearly we've been a little below average of the whole time period. Now, 2014 by anybody's metric was an unusually great year, but it's been unusually difficult, I think, in no small part because of the persistence of this downturn in prices.
Yeah, I think you've called it the long slog, and that's
Yeah.
part of the reason that's motivating us to think about maybe doing some things
Right.
differently here. Okay. So those prices over the last 4 years in particular have had some pretty big impacts. There have been a lot of challenges for farm profitability. There's also been some continuing uncertainty due to price variation.
Yep.
If you got really high prices in 2014 and then you got low ones in 2015, that's always a management challenge. We've seen accelerated dairy farm exits, not just here in Wisconsin, but other places around the country. And one of the things that's been a bit interesting, at least for me, and maybe some other observers, is that despite the long slog, we haven't actually decreased milk production. We've continued to grow it.
And in fact, cow numbers haven't been coming down until just the last few months and last part of 2018. Prior to that, our milk production increases were in the 2% range and now down about 0.5%.
Okay, so we've kind of had this long ongoing battle with prices, and at the same time we haven't really been helping out by slowing down the milk production that much. So,
Right.
Yeah, okay. Well, one of the questions we can ask, given where we've been the last 4 years, is what if we done some stuff differently during the 2014 Farm Bill? And a number of programs going back a long number of years have been recommending that we ought to think about doing something about milk production growth, and finding some way to better manage that and slow it down. And we analyzed 10 years ago some of the same kinds of programs we're going to talk about now.
In fact, they formed the template for the programs we're looking at now.
Yeah, exactly. Okay, so our goal is looking at what
might have been.
What might have been, yep. So to be more specific about it, we're looking at essentially 3 types of programs. There's sort of one that has 2 flavors. That one basically says you can grow milk production a certain amount per year, and if you want to go above that, you're going to pay something called a market access fee per hundredweight of milk. And the 2 flavors are really, do you do it all the time, or do you trigger it based on a low milk feed price ratio and take it off when the milk feed price ratio is good?
Yep.
The other flavor of program that we're looking at here is really one where you say we're going to look at a margin. When we get below a certain margin level, the program triggers and it requires producers to reduce their milk marketings.
Yep.
And if they market any milk above that required reduction, they're going to get paid what's called a marginal milk price, or a very low value for it. So,
and that was an aspect of the program that was in Foundation for the Future that got stripped and ultimately became the MPP program that we've had.
That's true. And the other flavor with the market access fee had been discussed among folks in the Holstein Association, and was actually legislation that was introduced into the House of Representatives.
Yes.
Yeah, didn't pass, but it was something that was on people's minds enough to talk about it. So these are things people have looked at before, but it made sense for us to do it in a new kind of market environment.
Sure.
So what we're trying to do is look at what would have happened if these programs have been in place instead of what we got in the 2014 Farm Bill.
Right.
And whenever we do something like this, obviously we have to look at what actually happened and then compare to that what would have happened if we did something differently.
Yep.
And that what actually happened we call a baseline, and then we compare other scenarios to that baseline. So
Sure.
that's how we're going to structure what we talk about. What were we interested in looking at? We were asked to look at milk prices, the variation in milk prices, importantly net farm operating income. Farm numbers was on people's minds as well. Also some broader impacts like how much does it cost the government to run these programs that it has in place, and also what happens to domestic demand, because what happens in the marketplace when we implement these kinds of programs.
Sure.
Yeah, so that's what we're looking at here. The bottom line on what we found was generally pretty positive in terms of thinking about what these programs could do. We saw reduced variation in prices and also some price enhancement. We saw increased net farm operating incomes. We saw reductions in the rate of farm exits. Government expenditures were reduced. And the one sort of thing you might think of as a bit of a downside was that we actually decreased domestic consumption of dairy products.
Well, I guess that goes along with enhanced prices.
That's exactly right.
Yeah.
So that it wouldn't be that surprising, but some folks
Sure.
might look at that with a bit of concern. So I want to show a graph that gives you just a visual quickly on what this kind of thing looks like. We looked at the baseline, that black line there, and then 3 different programs: the continuous market access fee program, one that's triggered off the milk feed price ratio, and one that's got this marginal milk pricing idea in place. You can see basically those market access fee programs raise milk prices a lot. They maintain some of the variability in place. A little bit different pattern for the marginal milk pricing, largely because the way that program is structured, it tends to turn off and on a little bit more, and it tends to be not quite as restrictive based
More
on how we
stable
looked at
prices, but
Yeah.
Lower.
More stable prices.
Lower than the other
That actually
programs.
turns out that price is about the same as the black line when all is said and done.
Right.
But it's got greater stability to it.
Right.
So for folks that are thinking that stability dimension is important, that could be something that would be attractive.
Sure.
We think about this in terms of the actual numbers. There's kind of 2 components to the impact for this market access fee program. One's what's the impact in the market of the milk price. That went up by about $1 in each of those cases, a bit more. But also, if you constrain your production to within an allowable growth, you're eligible to receive a refund from the pool of dollars that's paid by producers that
The
are
access
increasing
fees,
production,
right.
the access fees. Those access fees are shown down there in the bottom line. They go from 25 cents for small farms to $3 for large farms under the way we were looking at these programs, or for the second of them from a little bit over
But the draw
penny.
was an extra $1.50 or $1.88
Right. So-
for the 2 programs.
Right. So if you stayed within that allowable growth, you
Yeah.
got $1.50, $1.88, and net effects are something that's $2.60 per hundredweight, or almost $3 per hundredweight.
Yeah, well,
Okay.
that's a pretty
Pretty
substantial.
substantial thing.
Yep.
We also can look at the variation. Generally, these programs reduce the variation, although not by tons compared to what it would have been if we didn't have the programs. The marginal milk pricing was particularly effective at that. We also wanted to look at net farm operating incomes. Again, this is kind of a graph where the lines jump around a lot, but the bottom line is that blue line and that red line where we're
Much
looking
higher.
at market access fees, much higher. And the incomes are increased for all of the farms that agree to keep their growth within that allowable growth under the market access fee programs. But programs, or the farms that don't, who are expanding, particularly in the year they expand, are actually going to have a lower net farm operating income, but then they can actually benefit by being the recipient of those fees in the future.
Right,
Now-
but these outcomes are only for the farms that restricted their growth.
Yes, that's
Okay.
right in this case. Yep. So on a percentage basis, again, for those
a big
farms that
increase.
are that are keeping within the growth limits in a given year, for all farm size categories, those net farm operating incomes were increased. They were higher increases under this market access fee program, lower under marginal milk pricing, but still 20% even for some of the categories of farm sizes. So still pretty reasonable increase.
But for the programs where
Yeah.
you saw essentially a doubling of net farm operating income, important to remember
Yeah.
that this is compared to a time period when net operating incomes had been relatively low.
Yeah, we're not doubling 2014
No,
operating
no,
incomes.
right.
So that's, yeah. So those big percentages are saying there's some positive benefits
Yeah.
to doing that. But you're right, they start from kind of a low base.
Right.
Yeah. So farm numbers, again, we saw reduced rates of exit. We didn't stop farms. We didn't stabilize the total number of farms, but we slowed the rate substantially. And that was across all farm size categories.
Yep.
A lot of it had to do with slowing down the rate of exits due to business failure.
Sure.
Yeah. And one other thing, again, that we were looking at was how much it cost the government. Again, the key costs going forward are going to be the dairy margin coverage program. And given the levels of premiums and the level of margin that you can cover, we're actually projecting under the program, if we don't make any changes, some pretty substantial payments, more than $1 billion in the next couple of years. Those are lowered pretty substantially, and the lines there show that under the programs that we're looking at here, all of them lower the amount the government
Right.
have to pay for those programs.
I think important to clarify that
Yeah.
the programs that we looked at don't cost the government anything. In fact, they reduce
Right.
the government programs that are already part of law.
Right, exactly. So there's no direct involvement except for maybe some small administrative costs. Yep. So also we can look at the impact on domestic sales. I mentioned earlier that in general there's some negative impacts. They differ a little bit by the kind of product that you're looking at. But it's actually possible under some of these programs that you increase consumption a little bit, and that marginal milk pricing had that long period of lower prices.
Right.
That actually helped boost some consumption during that time period, and so actually for other cheeses other than
Small
American
increase,
styles,
but-
small
but
increases in
increase.
butter and dry whey, we got some small percentage increases.
Mhm.
So again, higher prices generally will tend to dampen demand a little bit, and we're
Yep.
sort of seeing that through this graph. Okay. So the bottom line on all this, based on our work, is that these programs seem to have some benefits. They can reduce price variability in farm exits. They can enhance prices in farm incomes, and they can reduce government expenditures. And maybe the one downside is reduced consumption. We should also be sort of straightforward and say, we assume when we do this kind of work that USDA could write the rules so the programs would work the way they're supposed to, and
Sure.
that was a point of discussion back 10 years ago when we were first looking at them.
Sure.
Yeah.
Well, thank you, Chuck. I mean, this is a quick overview. More information and some other documents that we'll have available, but this is, I think a pretty good summary of the programs.
Yeah. Thanks very much, Mark. Pleasure.
Okay.